Good morning and welcome to IGTV. I'm Angeline Ong, and another sunny morning here in London and across much of Europe. This is IG's early morning call, and let's get you across the headlines as we count down to the open. After those non-farm payrolls, the focus is on China's inflation. The yuan, the Aussie dollar and the New Zealand dollar slip. More details in just a moment. And it's all about central banks again this week. We've got the RBNZ and the Bank of Canada deciding on interest rates there. Plus, if that weren't enough, we've also got the start of the US earnings season. Of course, the big banks kick things off a little later in the week. Now, before we get to all that, let's have a look at the volatility index, which is still very low, showing a slight uptick in recent week or so, but it's between that 17.6 and 15.3 mark, really. So it's been trading around that range recently. But if you look at the longer picture, it has been trending lower ever since. Year first, the capital, otherwise. Slightly lower in pre-market in just the last few minutes, and last percent. Can you hear me now? Right, and just taking a look at the FTSE, a similar picture there too, indicated low. Asia, we had quite a different picture there. China's inflation data for June surprised on the downside, with consumer prices slipping 0.2% on the month to leave annual CPI dead flat. Producer prices Good morning and welcome to IGTV's early morning call. I'm Angeline Ong, and it's another sunny start to the London trading day. Coming up in today's program, after the non-farm payrolls, the focus turns to China and inflation there. We've got the yuan, the Aussie dollar and the New Zealand dollar slipping. More on that in just a moment. Plus, we have central banks again this week dominating, with the Royal Bank of New Zealand, the Central Bank of Canada deciding on interest rates. And the US earnings season kicks off. Big banks start proceedings later this Friday with their results. Now let's take a look at the volatility index. This is the VIX here. that's been trading in a narrow band between 15.28 and 17. The volatility is the share, and it has started ticking slightly higher here, as you can see, from around the 4th of July, but still very, very what do we do? Oh, maybe I'll just redo the chart, come out of IG chart and just go onto the, maybe the, which platform? Right, this is the other platform. Do you want to try this instead? Yeah. There you go. I mean, I don't have my charts set up on this, but I can just give it a go as we go along. Good morning and welcome to IGTV's early morning call. I'm Angeline Ong, and it's another sunny start to the London trading day. Coming up in today's program, after the non-farm payrolls, the focus on China is on its inflation figure. More on that in just a moment. The yuan, the Aussie dollar, and the New Zealand dollar are slipping. And central banks in focus again this week, with New Zealand, the Bank of Canada, deciding on interest rates. Plus, if that weren't enough, the US earnings kicks off with Wall Street's biggest banks reporting later in the week. Let's have a look at the volatility index first, because this index has been trading in a very narrow band recently. There has been a bit of a tick higher here since the end of June, but it's still between that 15 and 17 mark, this narrow trading band there. If we look further out, the volatility index or the fear gauge as it's otherwise known, has been tracking lower since the October 2022 period there. Now, the US economy added the fewest jobs in 2.5 years in June, but persistently strong wage growth pointed to still tight labor market conditions. This was the reading on Friday. Let's have a look at how the European markets are looking ahead of the bell after those numbers. Here's a look at the FTSE, indicating a slightly lower open there if volumes hold. Similar story for the Germany 40, as it's known on the IG platform, and also the CAC 40, or otherwise known as the France 40. Overnight in Asia, it's a slightly different picture mix there. The Nikkei down, Hang Seng up, and the ASX 200 down as well. China's inflation in focus there. The inflation data for June surprised on the downside. Consumer prices slipped 0.2% on the month, which left annual CPI flat. Producer prices fell 5.4% on the year, the sharpest decline since late 2015. Now, this soft data saw the yuan lose early gains, but Chinese blue chips were still up the last time I checked. Let's have a look at the Wall Street close for you. Now, major US stock indices fell on Friday, with weakness intensifying into the close as investors took in the latest monthly payrolls data. This offered a mixed view of the US jobs market. And as we count down to the opening bell, it's still some time before we get there. However, it is looking like a pretty flat open at the moment. Now, let's take a look at the US dollar, because it showed modest gains this morning, but remains lower than where it was on Friday. This is before the release of the non-farm payrolls. The US economy added 209,000 jobs last month, missing market expectations for the first time in 15 months. The job creations for May were also downwardly revised to 306,000. Now, just taking a look at the dollar for you, because in terms of the dollar, we did see the dollar decline slightly on that news. Yields also fell, I might add. Here's a look at the dollar versus the New Zealand dollar. There you have it, the Aussie dollar versus the New Zealand as well, given it's such an interesting week for the New Zealand Central Bank. In terms of the dollar against the yen, that also fell as low as 142 yen. Now, in China, fresh signs of slowing economic growth. The consumer price index was flat in June year on year, after a 0.2% gain recorded in May, and missing expectations of a 0.2% rise. This was the slowest pace recorded since February 2021. The producer price index also fell at the fastest pace since December 2015, and it fell for a 9th straight month by 5.4% year on year. Now, this latest data adds to the case that the PBOC's measures have so far not been sufficient. Beijing has set a target for a consumer inflation of around 3% this year, while economists only see it at around 1%. So, does this mean we should see further support from the PBOC? Well, the market anticipates only another 10 basis point cuts this year, and believes that support is more likely to come through fiscal measures. Just taking a look at the US dollar versus the yuan here. This is quite an interesting cross given all that we've seen recently. And as you can see here from my chart, which I'm adding now to my IG workspace, it has seen a very slow grind upwards since around the 16th of January 2023. However, since the recent numbers, it has come to a bit of a halt here, and it's stuck at the resistance level of 72,829, and looks like it could attempt, if this continues to move upwards, to try for that resistance point again sometime soon. Now, apart from all this, we could see more market moving events from the US later in the form of US wholesale inventories, which are due later this afternoon. Economists anticipate the index to fall by 0.1% in May, month on month. There's a huge amount of data still to come this week. A couple of central banks are set to decide on interest rates. Let's take you through New Zealand first. After hiking by 25 basis inflation have increased in recent weeks. Do you want to do a reboot? Yeah. Okay. Okay.